Unexpected rise in U.S. gasoline supplies as well. Speculation that the Middle East conflict will have little impact on crude production overall. Bob Bernanke's comments really setting the tone today for the market, but we are awaiting some news after the bell tonight that may very well set the tone for tomorrow.
That's right, Maria. A lot of tech bellwethers out with numbers tonight, including Intel, eBay, and Apple. Meantime, the bank stocks are among the top performing groups today. Let's take a look at the indices right now. The Dow, in fact, all the major indices, folks, right across the board, up about 2%. The Dow sitting right near its highs for the day. The Nasdaq also coming off last week's 52-week lows, having one of the best days in a while as well. That's on the upside. The S&P 500 also sitting right near its highs for the day. We're going to have wall-to-wall coverage of today's market rally. We've got all the angles covered. Our team standing by here at the New York Stock Exchange, the Chicago Merc, the Nasdaq, and the NYMEX, along with our special guest today, of course. First to Melissa Lee, our eye on the floor. Melissa.
Hi there, Bob. And traders down here are saying thank you, Ben Bernanke, because this rally is all thanks to what Ben Bernanke said about the economy, strong but moderating. And that is key, leaving the door open for the possibility that perhaps at the August meeting, there could in fact be a pause. We are looking right now at the best day for the Dow in 2006. This is the biggest point gain since March of 2003. This is the biggest percent gain for the Dow since June of 03. It is worth noting, though, that for the broader benchmark index, the S&P 500, this performance, while still very strong, we've seen similar performance to this day back in June of 06. The rally is very good across the board. Advancers leading decliners by a 7-to-1 margin. We have seen that pick up in just the past hour or so. We are also seeing some strength across sectors. International stocks are rallying. And as for what is losing on the Dow, well, even the loser just an hour ago, ExxonMobil, has since turned positive. Here's a group that's really benefiting from Bernanke's remarks today, and those are the banks. Bank stocks, of course, seen as the beneficiaries of a pause in interest rate hikes. Strong showing today, but keep in mind that if the markets were a little bit temperamental today, some of the news coming out of the bank stocks might not be looked at as very positively. JP Morgan, better than expected second quarter, certainly, but there are some concerns about credit quality. Markets, though, shrugging that off at this point. Let's go to Rick Santelli over in Chicago. Hi, Rick.
Hi, and thank you. Well, you know, it's always been the battle between growth and inflation. And Mr. Bernanke put it very succinctly. Just listen in his own words.
Clearly, we don't want to tighten too much to cause the economy to grow more slowly than its potential, and we are very aware of that concern, and we think about it, and we look at it, try to evaluate it. The risk in the other direction is that we would let inflation, if we were to stop tightening too soon, and inflation were to get higher and more persistent, then we'd be faced with a situation of having to address that later on with perhaps even more interest rate increases.
You know, those really sum up the traders' thoughts. As a matter of fact, those sum up the traders' thoughts really for the last 3 months. And indeed, if you look at how interest rates responded, look at an intraday 10-year chart, it was a swan dive down. As a matter of fact, at one point, it looked like we were going to get the lowest yield close going back to the 13th. But even at a 5.06 yield, these are arguably close to the lowest levels since weeks before the June 30th tightening. Maria, back to you.
Rick, thanks so much. And of course, oil also in the headlines. Prices falling as low as $72 a barrel earlier, which was the lowest intraday level in about 3 weeks. CNBC's Sharon Epperson is at the NYMEX with the energy trade today. Sharon?
Well, Maria, it was that weekly inventory data that we got out this morning for oil and gasoline supplies that showed a surprising build in crude and in gasoline. Atypical for this time of year, and that is what sent crude prices lower. We saw a build of about 200,000 barrels in crude, and we also saw a build of about 1.5 million barrels in gasoline. That was definitely not what analysts were expecting. Also, we saw gasoline demand week over week decline, another bearish sign, and also refinery runs were up, and capacity is now at about 93%, which is actually above where it was this time last year. So all of that bearish for crude, sending prices down to a settlement price of $72.66, almost 6% off of where we were this time on Friday when we hit that record 78.40 close. Gasoline also lower, and nat gas bucking the trend, moving in the positive direction of 5% after a bearish slide 12% over the course of this week. Now over to Scott Wapner, who's standing by at the NASDAQ. Scott?
All right, Sharon, thank you very much. And we have a big rally here at the NASDAQ, but the story without question is Yahoo. Yahoo down 22%, hitting a new 52-week low, and this 22% drop is the biggest one-day percentage drop ever for Yahoo. By now, you know the story. Yahoo comes out with earnings after the bell yesterday. Here's where the stock opens today, takes an immediate drop, and trades all the way down here, trading lower throughout the session to where we sit right now. Well, what is the problem? It's all about search market share. Google and Yahoo. Google now with 44.7% of market share in search. Yahoo with 28.5%. The big problem is this number is going up. This number is going down. However, Yahoo CFO Sue Decker, in a first on CNBC interview today, disputes these numbers, saying their own internal information tells that Yahoo search is actually stabilizing, is even increasing. But the fact of the matter is that these numbers from ComScore are the numbers that Wall Street and investors are looking at, and this is the result. Talked to an analyst today, Safa Rashti over at Piper Jaffray. I said, what is going on? We all know that Google is leading Yahoo, and here's what he says. He says, look, the problem is Yahoo can't close the gap with Google at all. He says Yahoo's growth is below the market, and here's the big issue. For every dollar that Google makes from search, Yahoo makes 60 to 70 cents, and it just can't seem to fix the problem. Perhaps that new search platform would help it do that, but as we heard yesterday after the bell, Yahoo was going to delay that for perhaps 2 to 3 months. Bob, let's head back to you.
Thank you, Scott. Tech stock's still underperforming here. Mr. Bernanke spoke today and the market reacted. Let's get more on the Fed chairman's effect on the markets. Neil Hennessy, the president and portfolio manager for the Hennessy Fund.